What if we could fix the defects of gold? What about digital gold? And that led us to crypto. And the idea of digital gold is, what if I actually could create 21 million gold coins, dematerialize them, move them at the speed of light, and then make it impossible for anybody to make any more of the gold coins? And what if I could move them on a computer? And I thought, well, that sounds like magic gold.
As Bitcoin continues to capture attention in the financial world, recent expert commentary offers a deeper understanding of its current market behavior and long-term value. Michael Saylor, CEO of MicroStrategy, provides a compelling perspective on Bitcoin's role as a digital capital asset and its enduring security features. Together, these insights paint a comprehensive picture of Bitcoin's market dynamics and intrinsic value. In his latest interview with podcaster Antonella Marti, Michael Saylor, CEO of MicroStrategy, explores Bitcoin's price dynamics and its role as a digital capital asset. Saylor emphasizes Bitcoin's creation by Satoshi Nakamoto as a peer-to-peer electronic cash system with a capped supply of 21 million coins, enforced by advanced semiconductor technology and distributed openly. He underscores Bitcoin's distinctive qualities, including its resilience and security, as demonstrated by the $60 billion in untouched coins in Nakamoto's wallet. This robustness highlights Bitcoin's potential as a secure store of value, even as its price experiences fluctuations. Watch clips from the interview for further insights into Michael Saylor's conversation with Antonella Marti. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video.
What I thought about Bitcoin when I heard about it the first time is probably what somebody in 1905 thought when they heard that someone in their neighborhood was playing with electricity. And then somebody's house burned down, and someone got shocked and they got electrocuted. I thought, it's kind of dangerous, but they're probably not going to let people keep doing that, or I don't know what'll happen. And then I switched back to whatever I was focused on. It was, so when I heard about Bitcoin, it must have been 2011, 2012. It was very new. And it was one of 100 things. I was fascinated by the mobile revolution. I was interested in iPhones. I was interested in smartwatches. I was interested in everything Facebook was doing, everything Microsoft was doing, everything Google was doing, everything Amazon was doing. And also there was the Bitcoin thing happening. And they were all just flickering. But, in my personal investments, I didn't invest in Bitcoin. I invested in Apple and Amazon and Facebook and Google. And in my business life, I didn't really think I needed Bitcoin. It wasn't an institutional grade asset. I wouldn't have really thought about that. What if we could fix the defects of gold? What about digital gold? And that led us to crypto. And the idea of digital gold is, what if I actually could create 21 million gold coins, dematerialize them, move them at the speed of light, and then make it impossible for anybody to make any more of the gold coins? And what if I could move them on a computer? And I thought, well, that sounds like magic gold. But if God came down from heaven and said, look, I'm going to run the monetary system. I'm going to create 21 million holy coins. I'm going to store them in heaven. I'm going to let you decompose them infinitely. I'm going to let you telepathically move them between any two counterparties and make sure nobody cheats each other. And I promise to do the work for next to nothing forever. You would probably think that's okay. That's probably an upgrade to every existing deal you're going to get. But in the absence of a deity offering to do that for you, then the next best thing is, what if we actually created that system with cryptography and the internet and some semiconductor technology? And that, in essence, is what Satoshi did. Satoshi created a crypto network, which is like perfect pharmaceutical-grade gold. Satoshi called it a peer-to-peer electronic cash system. But what that meant was, I'm going to create 21 million crypto coins, make them subdividable by 100 million Satoshis, so 2.1 quadrillion Satoshis. I'm going to enforce the protocol with semiconductor technology called SHA-256 hashing. I'm going to let you do that hashing using a semiconductor chip. And then I'm going to distribute that Bitcoin system on a node and give it to anybody on Earth and make it open and free. And so that system became a form of crypto gold. We were looking around for something to replace our dollars with. What is our treasury asset? And by process of elimination, everything else was overpriced or defective, or not acceptable from a regulatory point of view because they're securities and not commodities. So we found the one thing that might work, and you have to go through this analysis. Well, there's 10,000 copies. What's the winner? Well, Bitcoin was the winner of the 10,000 copies. Was it banned? No, it looked like it wasn't going to be banned because the IRS had designated it as property in 2014. And then the last part is that it had been hacked. And Satoshi has 1 million coins. It was worth $10 billion at the time we were looking. Today it's worth $60 billion. And no one can they can't hack it to get those 1 million coins in that wallet. And I figured if no one's figured out how to steal $10 billion hiding in plain sight, then it must be pretty hard to hack. And once we determined all that, we embarked on our Bitcoin journey.
According to Michael Saylor, Bitcoin is a digital capital instrument that offers a safe, incorruptible savings account. People can construct their lives on a strong basis, like constructing on a rock instead of sinking sand. Bitcoin offers defense against government devaluation, bank takeovers, and inflation. For businesses, having cash in US dollars means that the labor of their employees is rendered worthless by inflation. Businesses can create wealth thanks to Bitcoin's non-defective treasury asset, which has the potential to appreciate. Investing in Bitcoin offers a strong basis for growth, much like building on granite. Saylor emphasizes that Bitcoin is a desirable substitute for conventional assets since it offers a secure refuge for people and businesses to store capital and accumulate wealth over time. Let's go back to the interview and watch more clips to gain insights from Michael Saylor.
If you understand Bitcoin as digital capital or a capital asset, or think of it as the element of money which is store of value, the long-term store of value element, then it provides you with a capital asset to build your life on. If you're an individual, then it represents a savings account in cyberspace run by incorruptible software for someone that doesn't have the wherewithal to run their own hedge fund, right? It's simple, it's secure. If you just need a savings account where you work your entire life, you put money there and the money goes up in value, and you don't have to worry about the bank seizing it, the government debasing it, some company failing you. What does everybody want? They just want to not lose their money. But more importantly, if you have a certain amount of money and it buys less every single year, then you work your entire life, and when you retire, the money you've got is worthless. If it's in a Western bank, it's still there. It's just not buying anything. But if you live in an African nation, the money would be worthless maybe within a few years. So Bitcoin represents that global incorruptible savings account for individuals. There's the biblical phrase, build your house on rock and not sinking sand. You wouldn't build a house on a swamp. You wouldn't build your house on shifting sand. You wouldn't build it on a sinkhole. When you build a building, you want to put it on granite. And if you want the building to last for 100 years, you have to put it on granite outside of the floodplain. So if you think about a company and you have money in the company, if you take your cash flows and you convert them into US dollars, they're losing 7% of their value a year. You have $10 million, you're losing $700,000 a year in capital value. When we started this interview, you asked me how did I get interested in Bitcoin. Well, what I realized is the company, MicroStrategy, had 2,000 people making about $75 million a year in cash flow. And the $500 million in the Treasury was going to lose $75 million a year in value just sitting there. So what we realized is the Treasury asset was losing all of the money that everybody created through the work for the year. So what Bitcoin represents is a non-defective treasury asset to the world, right? If the cost of capital is 12% a year in dollars and you store your money in T-bills, your after-tax yield is 3%. So that means that the conventional strategy for every corporation and government and institution would be to invest at 3% but lose 12%, and therefore you're minus 9%. You're losing 9% of your capital every year. So if someone came along and said, I'm going to actually give you a capital asset that's going up 12% a year, that would be the same as building the house on granite and it doesn't sink. Okay, so at least you're not doing any damage via your savings, but you're not creating any value either via your savings. You're simply not destroying any. If you had an asset going up 24% a year, and Bitcoin's been going up much more than that, like it's going up 40, 50% a year for the past 4 years, but if it goes up faster than the cost of capital, you're actually putting your corporation on a rising platform. That's what rich people do.
Michael Saylor's vision of a digital gold standard underscores the importance of a stable and reliable digital asset, reflecting his belief in Bitcoin as a new form of magic gold. Given the current volatility and potential price decline, his perspective gains further relevance. Saylor has long championed Bitcoin as a superior store of value compared to traditional assets like gold, driven by its fixed supply of 21 million coins and its decentralized nature. The recent trends in Bitcoin's price and the fluctuations in USDT withdrawals highlight the ongoing uncertainties in the crypto market. For Saylor, these market dynamics reinforce his argument for Bitcoin's role as a hedge against instability. As investors navigate these turbulent conditions, the concept of Bitcoin as a digital gold alternative becomes even more pertinent. If Bitcoin can maintain or increase its value despite these challenges, it would validate Saylor's vision of it as a robust financial asset in the digital age. Ultimately, as the cryptocurrency market continues to evolve, Saylor's insights and the performance of Bitcoin may further illustrate whether his magic gold concept can fulfill its promise of being a secure and stable store of value amidst the volatility and shifting trends in the market. Even as the market twists and turns, the question now is, what do you believe is the biggest advantage of Bitcoin as a store of value, and how might it impact your financial future? Share your thoughts in the comments below. If you found this video insightful, please like, share, and subscribe for more updates. Thanks for watching.